Welcome to another day in the Matrix. This is Red Pill Podcast number 53. I hope you're all having an incredible weekend wherever you are. The weather where I'm at has been incredibly windy, so if you hear any noise in the background, just do your best to disregard it. My mic is pretty high quality, so it should be canceling out that noise, but needless to say, it's been like incredible winds here. I've been hearing about weather from all over the world being wacky the past couple weeks, so it's definitely a thing, guys. Anyways, last Friday live stream was so fun. I had an amazing time. You guys have such an incredible energy. So anyone who tuned into that live, or if you missed it, the replay is available within our Discord. And also, anyone who's joined in the month of April, I appreciate you so much for joining. Super grateful for you. And welcome to the Wolfpack. But if you have yet to get Discord access, go ahead and message me directly on Patreon with your Discord username and the last 4 digits. And that way I'll be able to reply back to you on Patreon messages with your Discord invite. Do not email me or try to contact me any other way. The best way to contact me once you become a patron of mine is through Patreon messages. I check those once a day and I pretty much get back to everyone as fast as possible. Another thing to bring up, we actually had a glitch on Discord about 2 days ago. I have no idea what happened. I don't know if it affected every other Discord server out there, but essentially when it transitioned into April, it removed the role from a couple of people in our community, and I have no idea how this happened, why this happened. I'm working behind the scenes to figure it out, but needless to say, it didn't affect everyone. It just affected some select members. And with that being said, if this happened to you, you'll know because if you go into your Discord and go to my server, if you don't see any of the text channels or the Mastermind community text channels, it's because your role was removed. No one kicked you out of the Discord, I promise. No mods or me removed you. You would know if you were removed because you wouldn't be able to see the server at all. So if you're going to your Discord app and you see that all the text channels are gone and the only one that's visible is called welcome, it's like hashtag welcome, what I want you to do is just go to that text channel and then you'll see server rules in like a post. Scroll down to the very bottom of that and there'll be a wolf emoji. Just go ahead and click on that wolf emoji. You'll see like 900 or 1,000 of that emoji has been clicked. That's because everyone needs to read that before they actually make it through onto our full server where they get all the text channels. So just go ahead and press that emoji, and what it'll do is reassign your role. You don't need to contact me for this problem. You should just be able to figure it out on your own. It's very simple. Again, just go to the welcome text channel and then scroll down through the server rules. At the very bottom, you'll be seeing a wolf emoji. Press that. And then the moment you press that, you're going to see you get all the text channels back. Okay. So pretty much you have Discord access as long as you're a patron of mine. Anyone who's not a patron does not have Discord access. So it's very, very simple, and I hope that helps. And apologies about that glitch. I have no idea why it happened. Of course, I don't want things like that to happen, but it's just something we all have to deal with. One thing that I have heard is in the transition into the month of April, there's been some changes in privacy policy and some of the things going on with Discord. And depending on certain countries, I guess certain IP addresses, this could have been the reason why it triggered. But again, it's not a big deal. It's pretty much all the same stuff that's been going on since time immemorial. So it's just something we'll get through. And if it happens again next month, I will at least be prepared to have some sort of solution. And again, you'll know how to fix the problem. If it happens again next month, it's very, very simple. You just click that wolf emoji in the welcome and it will fix that for you. So now that we have that out of the way, I hope everyone is having a beautiful weekend. This is, again, Red Pill Podcast number 53. Last week, we did our Red Pill for the full year anniversary. It was amazing. Had a really good time. One of the things I definitely want to mention, since we're moving on to like our new year here in the mastermind community, in the Waters Above Wolfpack, when we're doing these Red Pill podcasts, at the end, I have a section where I go over the altcoins. Of course, a lot of you are probably aware of this already, but the reason I'm bringing this up is because it's been quite difficult lately for me to select the altcoins that I go over. The reason is because you guys are the ones who vote on these coins. So I went out of my way today to set this episode up in a very intricate way. I will be going over Strong, which again, that was probably my most recent investment I've made in the market. A lot of people are intrigued about why I did that, what's going on there. And I'm going to break it all down with the TA. And I believe this will be an incredible episode for people who are trying to learn how to catch the bottom on an investment. In crypto, this market is extremely volatile. And one of the things that I've been really specializing in is this ability to know when to buy and when to sell. And that's really the biggest answer everyone wants to know. And in this community, we're not only able to do that with technicals, we're also pretty much able to do that with all of these esoteric applications we have, such as Gematria Numerology and Astrology. So once we remove our emotion from this game and we're left with the truth, which is the code and these charts, it really allows us to be able to navigate this chaos of investing. So today's episode, I think, is going to really help people with that, because I'll be looking at a brand new investment of mine and I'll be able to answer those questions as to why I decided to get in on this one. How did I do my TA to figure out when to buy it, etc. And a shout out over to my homie Chris for helping me out with bringing this coin to my attention. It's funny, actually. Strong and other coins that are tied to validator nodes have been brought to my attention by a lot of people, also DAOs. But I've been purposefully holding back on investing in them because all of their charts looked horrendous. So I'll just lay that out there right now. Strong and a lot of the other, how do I say this? Just a lot of the coins that are in this 1,000 to 3,000 market cap area, that's all I'll say. They are ridiculous. Their charts are all gross, and I'll just be honest, I really like to invest in projects after they've lost 95% of their value. And I used to say this, a while back. Anyone who's been following my work now for this whole year, you'll know that I've said many times, if Bitcoin has a 50 to 60% pullback, you can see a lot of these smaller altcoins lose 95 to 99% of their value easily. Okay. And I used to say that back in the day, and people would get really aggravated at me. But now that we're seeing it happen all the time, a lot of people are gaining this understanding now of how this market actually works. And that was the only thing I tried to help people with to begin with. The bigger reason why I was exposing that so early is because of where we were in the cycle and the fact that we were moving into Shemitah. And during Shemitah, we have a lot of volatility, a lot of chaos, and a lot of unpredictability. And the other thing that I used to support that ideology that we could see 90 to 95% drops in any of these coins is because Ethereum and XRP lost 95% of their value in the last quote-unquote bear market when they hit their top in early 2018 and then came down to a bottom into 2019. When you see ETH, the second biggest market cap crypto, lose 95% of its value, how could you not imagine that it would happen in a coin that's ranked a 1,000 market cap, right? So again, this is with zero emotion. It's the Red Pill podcast. There's going to be a lot of truths here. Some truths are hard to swallow, but my whole reason for sharing these truths with people is to help. The truth sets you free. And it's the emotion and the, this being married to a coin problem that so many people invite into their reality. That's really what I strive to help people with. I believe we did very well with this in XRP last year, kind of being able to get people relinquished of this XRP army mindset, getting people to look at it more for what it is, not for what we believe it to be. Because remember, belief is a barrier, not a bridge. And if we actually look at belief for what it really is, when we include that faith into us, the human species, that's where it has power. But when it is externalized belief, that's where we become enslaved by it, and we make emotional decisions that are not in our best interest. Okay? So we always have to go opposite of the herd. When the herd is scared or bored, that's probably the best time to start investing in a project. When the herd is excited and euphoric, it's probably a time to take some money off the table. So as we practice this, because remember, investing is a very long-term thing. I've brought this up a couple times, like comparing it to farming or something. Like, we think that the idea of investing, especially in cryptocurrency, is putting a seed into the ground and you're just going to get an apple tree tomorrow that bears fruit. That's not how it works. The standard tree that bears fruit takes about 3 years. Okay? So we need to look at this market as if it is part of an organic cycle in and of itself, because believe it or not, it is. The elite apex predators who designed, created, and implement all of the volatility in this market are astrologers. They study the cosmos, the constellations. They are in it, okay? When it comes to the esoteric, they are in it as deep as it gets, okay? They have access to the knowledge and the hidden wisdom of the mystery schools. So this is why I decided to focus on what those guys are interested in. Because when you start seeing Gematria Numerology and Astrology connections, and they're always giving you exactly what's to come and what does come, then you start to see there's so much depth to what's really going on here. It's not a news article. It's not one celebrity slapping another celebrity. It is, all of that is theater. It's theater to grab your attention. And when you allow that theater to grab your attention, you're basically electing it power. Okay? I want to help humanity get their power back. And the way we do that is by utilizing our attention to serve ourselves. And with this wisdom, we could actually set ourselves free. And then when we set ourselves free, we have that as our accomplishment. And the universal language is accomplishments, not words. Words are just talk. But when you utilize those words into your practice, whatever that is, and you get those accomplishments, that's where everyone else in the community turns their head and looks at you and says, I wonder what that guy or that girl is doing, because it seems to be working for them. That's the beauty in this whole thing. It's not to show off. It's not to showboat. It's just when you stop acting like everyone else in this matrix and start focusing your attention on what helps you, then you'll start seeing those you'll start manifesting abundance. That's really what this is all about. So that's how I wanted to kick off this episode. I think it's important that we remember these things. So with that being said, we've had a lot go on into the monthly close of March. I would love to start there with the TA. Kind of just show some very basic things that we have going on right here in the chart. You guys, might be asking, like, okay, we have these two firmament domes. We have a Fibonacci retracement pull from the April high down to the swing low over here in June. We're seeing this is a huge horizontal trading range, which, as you guys know, I like to see multi-year horizontal trading ranges. It's showing me that the asset we're looking at, or whatever it is that we're looking at, has actually gained some maturity, and that's very important, especially with a crypto. So this chart that we're seeing right now, it looks night and day different from the 2017 chart, from the 2014 to 2015 chart. This is becoming very, very mature. Okay, this asset class is showing me, if you look at any other crypto chart, you're going to see a lot of flaws. But when you start to actually analyze this Bitcoin chart, you're going to start to see, and I'm not saying look at it as if it's a crypto, look at it because it's titled Bitcoin. Remove all of those labels, okay? This is what will help people become higher just of a higher consciousness. Remove the label, okay? It's like when you meet someone in person and they call themselves a vegetarian or a Christian or whatever, and then you start judging them based on that. That says a lot about you, not a lot about them. Okay? Yes, they're on their own journey, they're on their own path, they're deciding to call themselves whatever, but you cannot judge another human for what they decide to call themselves. All right? It's like when we call people sheep or zombies, like, know where you were at in your journey, because at one time you were them. We're all one. We're all an extension of each other. And this sounds like it's like going off the rails, but believe it or not, a lot of people do this with cryptos. They hear about Bitcoin, they hear about Monero, they hear about XRP, and they start labeling things, but none of them look at charts, and that's why a lot of people fail. They only want to care about something when it's doing well. They only want to talk about it when it's doing well, and when it's doing bad, they like to talk negative about it, right? But you see how that none of that behavior has anything to do with the outcome of your portfolio? I see people all day chatting about XRP being boring, not doing this, not doing that. So what are you doing about it? Right? At the end of the day, it only actually matters what you're doing about it, or you're just wasting time typing away at a keyboard. Save your energy and study charts. And when you do this, you're going to come back later and go, oh, Jordan, thank you. I'm glad that I actually took time away from the drama and rerouted that energy into something that serves my education. Because once you start doing that, you're now doing a practice, a skill. You're actually growing. When you're sitting there pointing fingers, blaming, making fun of things, judging things, it's usually because of the title associated with it. That's why you guys know when I pull up a new chart on a coin, I'll instantly make a reaction because I don't care about the coin. I don't care about its use case. I don't care about the people who are in the project, the CEO or the programmer. None of that matters to me. It's like judging a country based on their leader. Is Joe Biden or, is any leader really the embodiment of a nation? No. They're the sock puppet of the nation. They're the talking head. You can't judge you can't judge Italy because of the Pope. You'd be such a negative human being to do such a thing. Right? So this goes for all things in life. And as you get to these podcasts, you're going to see I'm always going to kind of take these tangents because at the end of the day, all of this that we do is about mindset. Everything is an extension of that vibration. So what we're seeing here, if we remove the label of Bitcoin, if we remove all of like the ideas and preconceived notions we have, we can see a huge horizontal trading range multi-year with structure. All right. And what this is starting to look like is a huge broadening wedge of sorts where you have your low, you have a high, you have a higher low, higher high, and then here you have a pretty solidified higher low. This is structurally pretty impressive, okay? When will it become a problem? When it breaks 28K. Until then, it just is another day in the matrix. So I want to lay that out here because we're entering the month of April. We're already here. This is typically one of those months in crypto that's pretty good. It's a good performing month. The same way April ended up being March ended up being a very good performing month. Remember what I said a couple weeks ago? Because I said that in the month of March, it should be a pretty good month overall, bullish. And when we were in the middle of March, a lot of people were like, kind of mocking that statement, being like, you said it would be bullish, this, that, and the third. And I said, well, the month's not over. Okay? Like, do you see the way that we broke a 100-day structure to the upside? When we're analyzing this market, we don't analyze it day to day. You don't just join a market and tomorrow's outcome is your result. It's a process. Right? I don't judge the market on what it's doing today. I entered the market over here. So I look at the market based on when I got here. All right? And so should you. Now, we could have our opinions all day, but at the end of the day, what we're seeing here in this chart is showing me that this is cyclically changing, but it's becoming mature in that change. Whatever alteration that we're seeing right now is a mature alteration, and that's a good thing. It's a sign of being more grown up. But that isn't to say still that Bitcoin can have huge volatile corrections and huge volatile spikes to the upside. The volatility is here for a while. Just compare the market cap of Bitcoin to something like gold or something like the bond market. It's pretty mind-blowing how much room this crypto market has to go. And when we look at the blockchain analytics, which you guys can do on your own time by going to, there's so many things that actually show you the data of what's going on in the blockchain, but I don't pay too much attention to that, mostly because I'm a little too busy and I focus more on the creation of what I'm doing. But with that being said, we're seeing that the Bitcoin on exchanges is continuing to go down. The price is continuing to stay stable. And when it comes to the amount of Bitcoins that are circulating in supply, it's about 90.5%. So that means there's less than 10% of the Bitcoin ever is left to be mined. Okay, 90% of it has been mined and it is in wallets. And a majority of those wallet holders are the ultra rich. So a famous basic quote that's kind of become a cliche is follow the money. Now, this doesn't mean I'm telling anyone to invest in Bitcoin. It's just letting you know where we're at in this sector, the crypto sector, right? That's really important to take note of, because when you, again, remove the label, you end up with the data and the information, and you can make wise decisions based on that. And the real wisdom arrives when you increase the time horizon, when you're not looking to get rich yesterday or these get rich quick schemes, right? When you're actually looking at wealth as a sustainable growth. And I said this as part of my exit strategy blueprint. Oh, and this is another good thing to say before we, get on to the full TA of Bitcoin. A lot of people who do vote on the coins that are in the Red Pill episodes, they tend to ask about Theta, VeChain, VeTho, and T-Fuel, which again, VeTho, T-Fuel are more like the governance of Theta and VeChain. So let's hold off on doing those coins on Red Pill podcast, because again, I've gone over them the most, and it's unfair to the members that are looking for us to go over newer projects that I don't go over. And another thing is, those are within my exit strategy blueprint. So again, I'm not upset or mad or anything about people who want to know my TA updates on Theta. It's just to say that it's kind of exhausting to go over it so many times. You know what I mean? Like, we've gone over it enough now, and we have a long-term projection. And for anyone who has that exit strategy blueprint, we're seeing the way that's going. I mean, look at what Zilliqa just did. Zilliqa, according to where my exit strategy's at, swiped through two of my conservative targets already. I actually got my exit at 23 cents on the nose, shared my screen cap of my Binance sale. So, it is what it is. Whether it goes to hell after this or whether it shoots up to 40 cents after this, what matters most is that I had a plan and I traded that plan. And that's what I teach people. Don't worry about anything else that's going on. You have your TA, you have your plan. You need to use that plan. Don't get greedy, okay? It's the greed in people that, it allows them to hold back and not take action. And again, that's very full circle to everything we've talked about so far in this podcast. So let's look at the RSI. We could clearly see that there was an RSI resistance trend line here going back to the first high of October and then eventually around that second all-time high. Again, this trend line's a little bit loose because at the end of the day, it's the RSI, it's the relative strength index. So you're not going to be perfect on every touch point. That's not even the point. It's actually just trend. That's the point. So we could clearly see there was a downtrend. And then after that, we got into an extremely oversold level on the RSI, sitting around 19, which is very, very low, especially in a bullish cycle. And on this date, what we started to see was structure build, and the structure was built perfectly around the 236 fib. That's the key level I always teach you guys about. 236 fib is never a bad idea to, get excited about bounces and also to reaccumulate or to open up longs. Okay, that's not financial advice. It's just what the smartest people do who look at charts. Okay, people get scared when it starts to dip below this 236, but again, look, it always gravitates back towards it. And if it gets a little bit overextended to the top side, it'll gravitate back towards it. It needs time. The longer an asset trades on the open market, the more time it takes to fulfill patterns. This is a huge reason why I don't love pattern trading, because it's not as predictable, and it's a lot more volatile. So if we do have a pattern in play, be open-minded to the pattern being a little bit more volatile. It'll be extended more to the downside when it gets bearish and extended more to the upside when it's bullish, right? So what we're seeing also is, you see that little arrow there pointing at the recent move up to 48K. We hit back-to-back days around 48K with a little bit of a rejection. It was right around RSI getting slightly oversold, right around 70. Beautiful. Love to see that. Okay, so let's zoom in a little bit more. You can see where the rejection's coming in is around the 0.5 fib. Again, that's a thing that I teach everyone. 0.5 fib is really important, because after that, once we start solidifying movement above that, we have our golden pocket. So we always want to get prepared early. And when we see a gravitational pull to this 0.5, then start getting ready for a little bit of slowdown in the action, especially the larger the market cap. So that would go for things like Bitcoin, Ethereum, and when you're looking at stocks for sure. Now, with this being said, you can see this clear resistance trend line, this yellow line, and that's what I want to pay attention to now. Okay, so you could see this is on the daily closes. Daily closes on the candles is what I'm referring to, not the wicks. The wicks are extreme. You could see going back to around January when we had this dump down through the 0.5 fib. So you could see right here around this cluster near the end of the year 2021. And then that was right around the 0.5 fib, which is what we're dealing with right now. Once we dump below that, you can see that we had this little movement up, rejection. Then we some gravity back to it, rejection. And then again, another rejection, finally broke through it, and look at what we're doing now. We actually back tested it. And remember, always pay attention to days like this, where you see the wick lows that come in, the volatility to the downside ends in a green candle. That's very important to take note of, okay? Because that's a shakeout, or like what would some people call a short-term bear trap. You're getting bears into thinking we're just going to break structure and continue down, but we actually end the day bullish. So it was to flush out and liquidate leverage traders mostly. Okay, so with that being said, this back test is pretty beautiful, and we'll know that it was a clean back test once we get a daily close above the local closure highs. So technically, any close above 47,500 on the daily would be indicative of a movement up to our next level, which would be around 51,000. Okay, one step at a time, and Bitcoin's going to play like this, because this stage in the cycle, Bitcoin is going to have its volatility, but it's going to build its structure over the long term. And here we are, we're getting pretty close. Again, in 2 days, we have Satoshi Nakamoto's birthday. That's typically like a decent time frame to see movement, ritual price movement. And remember what I keep saying, Satoshi Nakamoto is turning 47 years old. Is it ironic that we're trading around 47K right now? Absolutely not. Remember, in the year of 2021, when we ended that year, we saw into the yearly close Bitcoin perfectly going to 46,000 when Satoshi Nakamoto is 46 years old. It's by design, guys. So this code is everything, all right? It's very important that people pay attention to even these exoteric things, like Satoshi Nakamoto's artificial. It's not a real person. This is exoteric theater that we're given. And as decoders, we can utilize that stuff to actually find what is esoteric, what's within it, what's hidden, right? Because the truth is hidden in plain sight, but it requires you to notice what's in plain sight. So with that being said, 47K around Satoshi's birthday, beautiful. We've seen the month of April actually maintain bullish all the way into the end up until May. So I have a decode coming out soon that'll be for the entire Shemitah. I'm actually going to decode the Shemitah with Gematria and make my numerology connections as well. And of course, throw in some of the astrology and astronomy stuff if needed. But with that being said, this back test that we're getting is clean. I really like it. Let's look at our weekly close, because that'll be coming in tonight. And you could see that this would be a beautiful weekly close, because it will be above the prior resistance level of that line that we're showing. Let me pull up some of these moving averages. Oh, and of course, if we got a weekly close above the 0.5 fib, which would be 46,800, that would also be very bullish. We know that coming in later today, the Chicago Mercantile Exchange opens the CME for Bitcoin. That's another thing to take into consideration. Okay, let me turn off these drawings so you can just see the moving averages. And look at this. So we're starting to see coiling together at this back test around 44,000, where we had that wick back test on a single day and a beautiful bounce since. Getting a green candle from here would be definitely indicative of continuation, but the fact that we're trading above the weekly 21 exponential moving average for 2 weeks straight, unless for some weird reason Bitcoin dumps to 43K tonight, that's a good sign. So the 21 exponential is this orange line. Any weekly trading above that level is continuation. So you could see right here, when we actually broke above it back in the summertime, we came up, back tested it on the weekly close, dipped down into the 34 EMA on the weekly, perfectly fine because it was just a wick. All right. Now this wick to the downside perfectly back tested the prior highs. And then again, after that, we bounced. We need corrections along the way. We're seeing that happen with Zilliqa right now. We need corrections along the way. When something goes up 300 or 400% in 5 days, you think it's just going to keep going up in a straight line? No, we need pullbacks. All right. That's healthy. So what we're seeing with this weekly close, pretty much anything that we're getting around here is great. And then this is a clean sign as well. So let me turn off those moving averages and you're going to see something right here. Okay, you see that white moving average? That's the 55 simple moving average, and that's a rejection at that level. We're trading that at 46,800. So again, any close on the weekly above 46,800. So I want you guys to like write down, if we could get a weekly close above 47K, that's pretty damn good, okay? Because that would get us above the 55 simple on the weekly, and that would also get us above that 0.5 fib that I talked about, and it would pretty much just show us an uptrend because it would be a bullish engulfing candle as well, for those of you that like candlestick analysis. Also, we have weekly MACD crossed bullish on histogram, so that's beautiful to see as well. I hope the pace of this TA is helpful for you guys. It's a lot. Okay, so we're seeing MACD on 5-day looking good, RSI on the 5-day looking bullish. Next 5-day close will be the night of Satoshi's birthday, so that'll be really awesome to see how that goes, because 5 days looking amazing. And any closures above 46,500, which is literally what we're trading at now, if we could get that on Satoshi's birthday. A 47K close on Satoshi's birthday would be so amazing, because it would be that 5-day candle and it would be above the 55 simple. And you see how this 8 simple moving average is curving to the upside. So if we could get a wolf cross, which is the 8 and the 55, that would be textbook. And then I suspect 50K Bitcoin should be in the cards before the end of the month. Okay, same issue here. You notice how almost every chart I'm looking at, the weekly 5-day, 3-day, we're getting this rejection at the 55. So pay attention to that 55, guys. Like I chose that number very purposefully. Satoshi Nakamoto and Gematria equals 55. Remember? Okay. And Chaldean. And what else equals 55? Platinum Jubilee equals 55, and that's what we're in right now, right? So we have to pay attention. That 55 is huge. It's a Fibonacci number, but it's so much deeper than that, you know? And the fact that it's the 10th Fibonacci, remember, when we have 10 in numerology, the 0 gets removed and it goes back to 1, okay? Because Satoshi Nakamoto is the 1. He is Neo. I still have to make my decode about Neo is Satoshi Nakamoto, because that's going to be so good. I have to make that for you guys. Just so many decodes to make. It's wow. Anyways, I get excited about this stuff because it's something that I actually love to do. I love to decode. And you could see these 200s are coiling together, 200 simple, 200 exponential right there, multiple closures on that. So in the event that this does get really dumpy, remember what I said, I would not get worried until Bitcoin starts closing below 38K. And that's where our 200s are. So these are all coiling together. It's looking pretty good. Let me turn this off for now. Oh, this is good. Okay, so you see the 3-day? You see how, if I know it's really difficult, but let me zoom up. So you see this blue has gotten above the orange. That's the 13 crossing above the 21. And if this 13 can cross above the red, which is the 34 exponential moving average, this would enter a much more bullish posture on the 3-day. This is looking real good, man. because it's happening slow. That's why I'm happy with this. You see how the 3-day RSI is 56, the 2-day RSI is 58. We're showing that we're building strength slowly. That's very healthy, okay? It's much more healthy than just going up in a straight line, right? So with that being said, this is a very nice structure. And you want to know something? This is what charts start to do when retail leaves. When retail gets out of a coin, the structure and the movement becomes so much more mature. And I love that. I love these stages where there's huge wipeouts because it gets all the leverage traders out of the retail level, like really unsophisticated retail traders out of the game. And then it invites the billionaires. And the billionaires aren't buying and selling on a daily basis. They're always just buying, okay? They don't sell. They leverage against their holdings as collateral. I've tried explaining this to people many times. It's hard for them to believe, but it's just a part of the rich. Like, it's what they do. Warren Buffett doesn't sell his stocks. He collateralizes them and borrows against it, okay? That's why he never fails, because there's a system in place that allows you to maintain holding this asset that'll grow over time pretty much indefinitely because we have quantitative easing and they're just printing money. The more you print money, you devalue the money supply, and anything that's risk on continues to grow. It's volatile for a while, but then after about a decade, 15, 20 years go by, they become more mature. And that's where you want to pay attention to. That's why Bitcoin's in its stage of turning from a, caterpillar into the butterfly, but it's still in that cocoon. All right. And when it becomes the butterfly, it's going to fly away to six figures. Sorry. It's going to fly away to a 6-digit Bitcoin. It'll be 100K. It'll stabilize probably around that level. And then it'll sort of look like a digital house, right? Like, there was a time where houses were below 100K, and then there was a time where 100K became the normal price of a house, and we just looked at it like that. And I'm talking about here in America, of course. I don't know what's going on in Europe and all the other places, but then it took about 20 years, and then it started looking like 200 was the average house, and it kind of just grows from there. But that's an analogy. I'm not trying to be so literal about that, but I'm just saying right now we're in that phase where, remember when Bitcoin was trading at $3,000 as its floor, as its bottom. We're in the process of still getting out of that range where 30K is the bottom. So think about that. 3,000 was the bottom down here. Sorry, I'm going to zoom out. This is what I really mean to show you. This huge. Okay, so 3,000 to 6,000 was the bottom. Just like right now, 30,000 to 60,000 is our range. And then once it breaks through that range, it'll probably maintain a new structure at a higher step on the ladder. Think about it based on logarithmic growth curve. Think about it based on just scarcity. We're just seeing this happen with this coin since its genesis. People keep saying it's not going to continue to do this. That's fine. That opinion is welcomed. But until it invalidates what I just said, it just is what it is. I mean, this coin is scarce and it's being bought by the elite rich as if it is scarce. Everyone's opinion on Twitter and YouTube doesn't matter because what's happening in real life is that they're buying it. So it just, again, you can't deny what's actually happening on the blockchain. That's the beauty of the blockchain, actually, because it's an open ledger for everyone to see what's going on. So really nothing to say on this until we get daily closes above 47. That would be on the macro structure, very amazing. And then, of course, 48K and higher, because that would be the daily structure. And then anything lower than the 21 exponential moving average on the daily, that would bring us to another level to the downside, probably around 42. So holding that 21 exponential on the daily chart would be very, very healthy. Okay, and then you can see that there's clearly rejections here at the 200 simple moving average, but we're holding the 200 exponential, so that's very good. We're kind of sandwiched in between those two layers, so keep that in mind. Ethereum. Okay, fuck. All right, well, this is great. Look at what happens when Bitcoin chills out. ETH just starts to really wake up. So ETH might close tonight above the 200 simple moving average, which it hasn't done since basically the start of the year. So that would be a full-blown backup phase. So when you're doing Wyckoff, you have your SOSs and then you have backup phases, or LPSs, last point of support. For those of you that are into Wyckoff, you could analyze it like as such. Here, your extreme lows, that would be the start of your backup phase. But if you were to map this out, which I have done many times, you have your buying climax, which does look like a blow off top. Then you have your selling climax, a textbook double bottom W breakout into some sort of automatic reaction or automatic rally. Then you back test the prior cluster of trading, and then you have a rally to the upside. This is like an up thrust, and it's a slightly new higher high or newer all-time high, but it's a bull trap, okay? This gets bulls thinking we're just going to keep going to heaven, but it's actually a trap, and a bull trap followed by a micro bull trap and then continuation to the downside. Not being able to hold the structure right there on the back test brings you into a full-blown backup phase. So that comes full circle in the overall analysis. This is a backup phase, and the backup phase is looking pretty damn good. You can see the top of this bigger W was right around 3,200, and a couple days ago we back tested that with a bullish bounce and a daily close above the highs in the structure. I mean, can you say anything more bullish? You break out, back test the prior high. The same day you close a higher high on your daily closes than the cluster of trading days before. And then since you've actually created an uptrend. So if this wick doesn't say the story, then today should. Because again, any closure above 34,050 would just be a continuation candle. And you're above this prior structure here, which would be your closure highs. Now the resistance should come in around this level anyways. So let's look at the, yeah, okay. So remember this trend line? I also gave a shout out to this on Trading Wolves. This yellow trend line was where I was anticipating us to gravitate towards. And we're like within a couple, yeah, we're within $70. Okay. So that's a good level to de-risk because it's right around the 702 fib. All right. It like crosses right at that level. But of course, this can just be continuation because you have SOSs, signs of strength, followed by bigger backup phases, which are also followed by another SOS. And then you just have what's considered like a huge widening wedge, like I brought up with Bitcoin. And then if it broke out to new all-time highs, you're essentially anticipating a move up to the 1618 in this bigger range. And a $6,000 ETH in the month of May would be totally possible. I mean, just look at where it's at today. You're talking about like getting there before the May eclipse would only be 70%, guys. 70%. All right, look at this bounce right here up to Rosh Hashanah highs, 127%. So can this make it to $6,000 before the May eclipse? Absolutely. I mean, especially if Bitcoin gets back into like 51. So I'm not saying that will happen. I'm just saying that's part of it. It's part of the TA. Making it to the 1618 in this sort of structure is very normal. Anyone who studies the charts knows that. So especially with 3 clean retests off the bottom of this red trend line. I mean, this is showing a real sign of strength and a noticeable uptrend, which is incredibly bullish. Plus high, plus higher high. So even though this was a bull trap, it's still very bullish in structure. Again, you just take advantage of any huge dips as an investor. An investor just looks for these huge dips and buys the dips because they don't care. Their thesis is long term. So this is looking good. I mean, closures above this level here would be indicative of moving up into the top of the golden pocket, which for me would show lots of strength. This is a trap area, okay? So if you're somebody who's been in ETH since it was fucking $300 and you didn't sell all back here, don't mess around right now, okay? Because we're in Shemitah. Like, this is not a time to play games. You know, take your 10x, de-risk at your 10x. Don't get fancy. And I've taught, like, you know, the exit strategy blueprint has a full video on ETH, all of the Gematria tied to it. So definitely reference that if needed. But right now, this structure in the short term is looking really good. And downside would be closures of below 3,351. And then I would anticipate either a retest of that little wick right there around 3,200 or a flash to 3,000. But we're definitely more bullish trajectory right now than anything bearish, according to structure. But like I said, we're in crypto. This could invalidate fast. So just be open-minded. And I gave my warning to you traders out there on ETH. Where it's at right now is not a level to play games. So XRP looking like it's ready to blast. I mean, very similar structure to over here, okay? Where we had dramatic low. This would be your dramatic low. Then you have a little bit of a reaction, but then this nice uptrend. You see that? Just clean uptrend. It's the same thing we're going through right now. Just clean uptrend after a very dramatic top, followed by a huge correction, like a top, same structure too. You see this crown top, or like some people like to call it a Bart Simpson head. So you have your crown top, huge washout, crown top, huge washout. Then you have an extreme low, followed by a reaction. Your reaction comes within the highs, but not quite new highs. Again, that was my last sell on XRP. It was $1.40. It was on that exact time. And I did that purposefully because that was around the golden pocket, and $1.40 ties to the gematria of XRP. You could see this right here. XRP equals 14 in reversible reduction. So I wasn't playing games. I was using my gematria according to plan. And it paid off. So now, since we're kind of just chilling in this range, and it's definitely getting close. Let's look at some of the MACD profiles. So we're above 50 on RSI, but we're still below. Nice little bearish cross on the 1 day. I like these short-term quote unquote bearish crosses. Don't ask me why. It's just because these coins move too quick, and it's good for them to have a little bit of a slowdown. Okay, we're right about 55 on that RSI, and then the MACD bullish territory within the MACD and still green. This is in the negative slightly, but that's fine. We're looking good on 3-day, which means 5-day is good, which means weekly is good, which means, okay. So bi-weekly, we're still in the positive territories, but yeah, it's this change of color to pink, and the bottoming structure of this blue moving average is definitely showing that this is probably bottomed on the bi-weekly. And you see this is like a huge W pattern. Like if you were to just, let me maybe go to monthly, and no, it's a little too dramatic. Let me turn this to area, and yeah. Oof, if this thing breaks above, closes a bi-weekly above 150, game over. This shit's going straight to $3. And you guys know me, man. I'm not dramatic. Like, I'm just telling you what I see. I'm the first person to tell you, like, when I think the coin's ready or not, and it's pretty close. This is also that month where XRP tends to make those sorts of straight line breakout moves, and people wait and talk shit, keep talking shit, and then it goes up in a straight line, and then everyone and their mother wants to talk about XRP. I'm the opposite. I don't want to talk about it after it breaks out, you know? It's necessary in videos to discuss it, just because again, you know my channel, I talk about XRP in every video all the time. So no one can say that about my work. They can never say that, oh, he just talks about XRP when it breaks out. It's like, no, I talk about it every week. And the reason why is because I have the long-term I have an outline on this. I have a thesis that I made for myself, and I've already de-risked this coin like 5 times. So, and I've also reshifted liquidity and rotated it from this sales on XRP to other things. So that's a sophisticated tactic. It's not easy to do. I don't recommend everyone get into doing stuff like that, but it does work. You just have to be very open-minded and have to be cautious. You can't take 100% of whatever you de-risked in one project and throw all 100% into something else. And then if it drops, you're sitting there bitching and moaning. You need to secure some of your capital that you gain. So if you put $100 into something, it goes up to 500. You could sell 100% of that if you want, if you're sure that it'll go back down. And again, that's on you. But then don't take all 500 of those dollars and throw it in another project. Put like 200 in your pocket and play with 300 of it. This way you're always growing a little bit of your stack in fiat, because at the end of the day, that's what we use to pay for shit in our life. So people who are fiat poor but crypto rich, like, that's cool and all, but when we're in big massive pullbacks, you kind of probably don't feel that great, right? So you need to have a very comprehensive strategy where you're actually securing some of the wealth. You're not putting money in crypto at the lows to have more expensive crypto at the highs. You're trying to regain fiat. You're trying to get your capital back. right? Like nobody could say otherwise. The only people who have a slightly different mindset are multimillionaires or billionaires because they have so much assets and so much fiat and so much lending power that this is nothing to them. You know, playing with these intangible coins is like, it's nothing. It doesn't even matter. It could go to zero, it could go to a billion. They don't care because they already built their stack. But people that don't have that don't have a lot of fiat or lending power or the ability to easily get loans or collateral to be able to borrow against, people who have none of that, you need to be securing wealth on any moves you make in this market. And then if you want to rotate those de-risks into other things, just make sure you keep a little bit of what you've earned, okay? Don't just keep flooding it, because I've seen this happen so many times where people play with the shit coins and they put 100 in, they make 1,000, then they throw 1,000 into something else and it completely tanks and they go back to where they started. But if they would have kept 500 of that and then played with 500 of that and then lost that on the next bad call, then they would have only lost 500, but they would have gained 400 overall. Don't you want to be that guy? So I'm just trying to teach you the ways of the Jedi, you know? Like, I'm not trying to get you to not take full advantage. It's that you want to be playing this in a very sophisticated manner. Play like a chess player, not like a checkers player. But anyways, with that being said, until this thing breaks above 97 cents, party's not started. But the speed at which it could do that is in a single day. So from where it's at now to closures above 97 cents, we're talking about 17% gain. Should probably finish my coffee. Okay. And downside would probably be any closures below. I mean, we would need a closure below 71 cents to really start having issues. So looking good. Okay. Strong. Okay, I'm going to break this down really quickly and we're going to move through the altcoins pretty quickly. So here's the strong chart. I'm going to turn off everything and then I'm going to explain my TA. Okay, so this is the best chart I could find, right? We have a pretty noticeable parallel channel to the upside and then topping out at around 1,190 bucks. Again, we're starting to see a bearish divergence form around this level right here. Once we hit around 690, we could see RSI getting to around 90, and then this pullback followed by an additional move up to 1,190 and lower RSI. That was a clear sign that we need to get the hell out because we're getting overheated on RSI still, but showing lower highs on RSI while we're seeing higher highs in price. That would have been a point to GTFO. Now, here was when it got really squirrely, when it returned back to the support levels of right here. Then you can see that's about the time where you anticipate what's called a automatic reaction. So from this top right here to the full move to the downside was about 70% or so. That's about how much it takes for a coin to need a little bit of kickback. And that kickback could happen quick, and that's where you want to pay attention. This is your second chance to get out. If you didn't get out whilst it was falling, then you have the opportunity to get out on a bump, okay? Now, where we could have decided this is where RSI started to get oversold. So let's zoom in now, and you're going to see, I'm going to give you the full TA on this because this is where you're going to learn so much. So right here, you can see the price is 460 and RSI was sitting into oversold levels. Then we have a lower price, but RSI starts to make an uptrend. So this is a bullish divergence. This would have been time to buy, okay? But then again, what do I always tell you guys? A crypto can lose 95 to 99%. So if it only pulled back this much, 70, 60%, then it's got a lot more room to go. So this is where you think like a swing trader, not like an accumulator, okay? So this would have been a level to accumulate to play that automatic rally. And I've been teaching Wyckoff since day one. Before I even had a YouTube channel, I was teaching everyone Wyckoff method. So if you don't know what automatic rally is, definitely consider the Mastermind course. It teaches you all about Wyckoff method. So you would have noticed this bullish divergence forming and you could have bought, especially buying that oversold RSI. Then you would want to consider drawing some fibs. So I'm going to pull a fib from this level right here over to this level right here. It's going to look really messy. So what I'm going to do is I'm going to just zoom in and try to show you. It's these numbers right here. And you could see the top out point was coming in around the 382 fib. All right, that's something to keep in mind when we haven't had a full retracement. A full retracement would be over 80% losses. All right, now what I did, now that we're here, that would have been your final chance to get out. Okay. Now you would have proven that when we returned back to this level right here around 416, because that was the low off of the bounce level. So what I did was I pulled a Fibonacci retracement in reverse. It's called a bearish pull. I pulled it from this level right here up to this swing high. And then I took a measured move off of the top down to the support level, which ended up being the 888 fib, just like I always teach you guys. Now you're going to see why the 888 fib was the most life-changing piece of TA I've ever shared with the world. Because right when we got to that level initially, you know, we could have actually pulled the fib bullish off of here to here or in reverse and gotten that level before it even came to that level. And then secondly, we would have been able to pull this to here when it topped out, and then we would have been able to figure out the level for invalidation of structure. Invalidation of structure was when we started closing dailies below the 8.8 fib after the first retest. I know this is a lot to take in, but you're getting it all right? Breaking this level was when we anticipated drainage, okay? So I'm going to put this in linear chart because this will actually be better. So you could see the pull is from this level to this level. Let me reset the chart really quickly for you guys. Now I'm going to take this measured move and I'm going to bring it to the 888 fib, the level in which it broke structure. You can see it perfectly right there. Now I'm going to zoom in. Look at where this dropped to. Within like a centimeter of the price, okay? So this came down to 107 and the measured move came down to around 95, right within that level. So anything around there would have been accumulation. And since then, we're in accumulation. But let me get even more, like, this is revealing it all. Seriously. Remember that fib that I pulled from here to there? Look at where the 1618 is. It would have told you the overall average range we would have pulled back down to. And look at what happened. We came straight down into that territory of the 1618. All right. So this shit is powerful, guys. Like, this TA works. It's amazing. And this is the stuff I use when I'm trying to quote unquote catch a falling knife. First of all, I wait way longer than everyone else waits because I'm patient. And when you have that patience and you have the TA to be able to make your own decisions, well, you could see how it pays off. So I made my first investment in this coin at $1.23. Jordan, why did you buy that level? Well, I pulled fibs, like I always do, off of this level right here, which was the initial bounce up to the first swing high, the first automatic reaction, if you want to call it that. And the levels that I was seeing for the golden pocket and the 888. Again, look at how perfect this is. All the daily closes so far, structurally right there on the 888. It always works. It just always works. It's beautiful. So since I saw bounces on that level, I was feeling like okay building a position. And around 123 was where I first got in. It's right within that cluster right there. And I'm saving another future investment in case this invalidates and we trade below the 888 and have a double bottom. But so far we're holding structure. And again, let me show you the RSI. You notice right here, we have a trend. So the RSI gets the most oversold here on February 24th, around 18 RSI in the daily. But look at the price. The price is at 260. So we have a price downtrend, but we have a RSI uptrend, bullish divergence. So you see how long I waited for this bullish divergence to play out. And now we're starting to see it's a clean parallel channel. And this is about time for a reversal. So if I pull from here all the way up at the all-time high down to the swing low at $106, you're going to see that's about a 91% loss. So I started building my position in this coin from swing high down to entry at 123, around 90%. So I bought the 90% discount, but I did so much TA on it to figure out that level. Okay, so now what's the invalidation? Well, very simple. Remember how I showed you the fibs before? When we pull our bearish fib from the swing high to swing low in the structure, we want to look for the 1618. So this is where it comes into play where we need to pay attention. So if you're somebody who's into this project because of the nodes, validator nodes, and earning strong, then you know that if you were to hold this for 1 year at this level, if it dropped all the way to 65, you would still be in a net profit. So this is a win-win investment in my opinion. And I haven't really gotten too deep into the nodes just yet. I'm just building my position, taking it one step at a time. So that's the big overall reason for this project, is to get into the nodes and to start earning passive and to just have set it and forget it money that I could generate during a bear market. And when I say bear market, I'm not talking about crypto. I'm talking about the overall Shemitah cycle and how after Rosh Hashanah, at the end of Shemitah, we typically have big pullbacks and we enter somewhat of a bearish structure in the overall market. I'm not just talking about crypto. You guys know how I feel about bull and bear markets. Crypto is isolated right now because it's so new. It needs time to mature. Bitcoin's just starting to mature. Everything else kind of just looks like chaos, you know? So with that being said, if this invalidates and starts closing dailies below 106 especially, or I would just say around 112, then I would anticipate, okay, this could do one more flush. And if it's going to do a flush like that, to me, what that would look like is a spring in Wyckoff in the short term. And Wyckoff springs are the best. And if that was to happen, we're looking at a full 95% loss, and a full 90% loss 95% loss is about as good as it gets with crypto. So the move up for this now, I'm anticipating to get back to the 888 of the prior structure. And that would probably be the first resistance we have if we're to close above 173. So I have a full plan. And then that play from 123 upwards of around 400 is looking like 200%, which sounds like dog shit. But if you're doing validator nodes, your coins that you're earning passively are growing in, they're gaining value. So you don't want to be getting into these validator nodes all the way at the top, because then the thing you're earning is dropping in value substantially. So again, it's all about strategy and how long-term you're committed to this. But for me, I'm feeling good about this initial investment. I think I had so much methodology behind it. I'm not just taking someone's word for it. I'm doing the analysis. And this is what I want you all to do with everything you're interested in. And I believe this was a good TA lesson for everyone. It should have taught you a lot. So let's move on. That was more than just a Red Pill podcast coin review. You know, that's like a full-blown explanation of why I invested and how I like to invest based on the TA. So let me go through this stuff a little bit quicker, because we're about an hour now. But I feel like you got most of the gold in just with that. So we're going to look at Matic, Polygon, and what we're seeing here is a big horizontal trading range that's showing maturity with like a double top. Okay, so this is probably something to be a little bit more cautious on, because the chart structure is not looking so awesome. Okay, it's showing in this pattern. This is okay, but the idea of price discovery on this is a little less likely just because of the chart structure. Again, when we have this sort of dramatic spike to the upside, but it drowns out with probably 50% plus losses, it's just very blow off toppy. That's all I want to say. I don't really like that, but I do hold a little bit of this coin, and I plan to de-risk a little bit of it into the 888 fib. So anywhere above that 786, and then of course we could get lucky on this and it could move up to 4 around that 1618. But right now we need an alt season for that to happen. This coin's probably not going to do that in isolation. All right. Like something like ZIL just did. We're going to need the whole altcoin market to move up for this thing to wake up, because it's already done amazing moves. I mean, look at this shit. You know, we're talking about off this horizontal trading range that formed after the C word, where, you know, fucking 13,000%. Excuse my curses, but geez, man. Like, people who are expecting much, much more in this, yeah, you got to chill out, all right? Like, look at this as a straight line breakout into this horizontal trading range. So what I like about this is that, A, it's a horizontal trading range. What I don't like about it is both tops are very, very violent kind of blow off structure, but it's following ETH. This looks like it's following ETH to the T. So again, if ETH breaks out and goes to the 1618, I suspect this will break out and go to the 1618. And then the highest this could possibly go in this structure right now, I shouldn't say possibly. Anything's possible, but what I would anticipate this to be the most dramatic move is 10, and I would not personally anticipate this to get much higher than the 2618 at $6.50. So this is looking fine. Invalidations to the downside would be closures below $1.03, which would be a break of structure. But so far we have low, higher, low, higher, low, higher, low, and now we're just showing somewhat of a parallel channel, rising parallel channel. It's looking fine. I do hold this, and I plan to sell this. Its huge price appreciation is pretty much gonzo. But, I mean, we're looking at right here, if it was to move into the 2618, it's 200%. Not bad. Not bad, not bad. Okay, let's move on. Omisego. It's been a while. I don't hold this. Oof. Okay. Oh, shit. Okay, so off the C-word range, we're only looking at 1,000% or so, which is okay. I mean, even I did 1,500% on XRP last year, so... And that people make fun of that coin. I don't know what's going on here. This is a very parabolic advance off the launch, but it went right back to it on the... So this is like what Strong did. You know, Strong off the launch had a huge move, and then it broke down all the way to the C word and then retested around the lows, which is about kind of like what it's doing right now. This chart is wavy. Massive W. Jeez Louise. If this could break above the 1618, that'd be legendary. I suspect this would be a move into the 50s. It's suppressed. Unlike Matic that we just looked at, this shit's suppressed. It actually got a lower high than the prior higher all-time high. And that was right within the 1618. So we have to watch out for shit like that, okay? If I pull a fib from this high down to this swing low, you're going to see we actually got rejected at this prior yearly high right in the golden pocket. So I told you guys, don't mess around with that golden pocket. De-risk. Because if you built a position in this thing during the whole time frame from like basically all of 2019 over to the year of 2020, I mean, you're talking about into that golden pocket almost a 10x. So I mean, you had the opportunity. Now this is looking awkward, but it's suppressed. It's a very ugly chart. Sometimes ugly charts are where you want to put your money though. Yeah, this thing's beaten and bruised. I mean, I don't know if it could go much lower. It's building a lot of chart history around this range. So I suspect that this was your first big range and then it stepped up and now it's around 5 and then it should step up and then solidify trading around 2 digits, around $10. And that would be the prior range of the prior all-time high. And then we should start seeing price discovery. I suspect when alt season really kicks in, Omisego will probably go to 35 to 56. And 56 is a very ritual number, again, for those people that are into Gematria. What's going on with Aave? Next coin. Ooh, okay. So I did TA on this in the past, but it must have been a while. Ooh, okay, it needs to get above that 236. So that right there is your issue. So this is from swing high to swing low. It's almost been a full year since it's all-time high, so that's a good thing, okay? 1 full year from all-time high is typical for you to get into oversold RSI levels and to have what's considered your full retracement. And if we go from this level here down to the swing low, we're looking at 84%. That's, to me, that validates a full retracement. So this thing has been beaten and bruised, and now once it gets above the 236, it should pretty much start moving up towards the 0.5 fib to the golden pocket. And then this, ooh, okay, no. Okay, this isn't going to, I don't know if this will have the juice to go much higher. I should have zoomed out. Holy shit. Okay, so we're going to want to pull a fib from here. And this has gone above the 10 spot fib extension, which is a full bull run. Yeah. Okay. Okay. 150,000%. Get the fuck out of here, dude. Okay, no. I wouldn't touch this. No. No, 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 no. Oh my god, dude. Wow. Whoever sold this shit last year, you're a fucking legend if you bought this in 2019. Holy moly. 140,000% in like 2 years. That's like what Bitcoin used to do. Wow. Wow, 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 wowie zowie. Alrighty. You know what's funny? I used to look at this coin when it was called like Lend or something. Wasn't it called Lend? Lend? And I remember sleeping on this shit, man. Oh shit. Just that was gorgeous. Wow, 30,000%. All right, I wouldn't touch this thing. I'm sorry. It's just gained way too much value in too short of a time. And I would de-risk into the golden pocket. I would play it safe if I had this thing, especially if I bought it last year or 2 years ago. Oh my god. Wow. Congrats to anyone who had this shit. Mind-blowing. I mean, at best, it could pull off like sort of what like H bar did, where it got slightly below its 1618. But I mean, this thing getting into $1,000 from being less than $1, that is fucking amazing. Wow. Okay, yeah, horizontal trading range. This is clearly a spring. We should have some sort of SOS, which would bring us into the golden pocket. Anything above this level right here, 455, would call it an SOS. I'm just trying to get my emotions out of this because that's an incredible chart. But you see how I'm counter? Some people look at charts like this and they go, oh, I need to buy this. And I'm looking at a chart like this and I'm like, no, I don't want to buy this because it's already done its moves. I want to get stuff that's boring, that has yet to do the big moves. And this one's already a candidate for something that's toasted, you know. But yeah, anything above this level right here, 450, we call that an SOS. And then after your SOS is sometimes you can move to the 1618, and then after rejection at the 1618, build strength into the $400 territory, somewhere around this 382, all the way as deep as the 236, and then you would have overall chart structure now for the long term into the next cycle. And when I say next cycle, I'm talking about the next halving for Bitcoin, 2024 March to May. Okay, last thing, very quickly, Solana and Luna together, because Sol was one of the best calls pretty much ever. I was talking about how the 6-spot fib extension is extremely overheated and to watch out, and then I drew this yellow line around the 2618, and it said if we close below that yellow line, we're going to get dumpy. We're going to get dumpy to the 1618. This is exactly the way I did TA on this. Anyone who goes back and watches my last TA on Sol, especially when it was correcting off the 6-spot fib extension, you would know that was the call. Okay, so that's the way it goes, guys. When it gets into the 5 to 6-spot fib extension, it tends to chill out, and then it likes to gravitate eventually down to the golden ratio, the 1618, and that's what happened. Okay, so I was telling people to not fucking put money in this thing. Like, this is no bueno. When something has gone up in a straight line like this, like, you do need to watch out, and we're in Shemitah. So just be careful, man. I mean, 70% loss off that move is not enough. So we're seeing rebound, but again, just be careful. And the amount of returns you have potentially, I mean, even in an alt season might be a double top at 90% gain, or if it really wants to move from this level here to the 10, that's 200%, or from if you bought in at this 1618, which would have been a swing trade idea, but by no means a fucking investment, 400%. But like Zilliqa just did this a couple days ago. So what are you I'm just worried because people look at charts like this and they don't shut up. I'll just be honest. People look at charts like this, let's go to Luna, and they just don't be quiet. So I'm helping you guys. Okay? So what do we have going on here? I said the same thing as this. I said potentially up to the 6-spot fib extension a while back. And then we had this correction down to the 2618. And I said if we can't hold the 2618, we return back to the 1618. Guess what? It held the 2618. Now it's gravitating up towards the 6-spot fib extension. Is this really where we want to get fancy putting in investments when we have a noticeable bearish divergence? And off of this pullback to where it is today, 120%. I mean, Digibyte just did this in like 3 days. So where do we want to be putting our, like, why are people talking about this thing, man? Okay, I'll tell you a hint, all right? Luna does well on new moons. We know that because it's Luna, the moon, all right? So just be careful with this stuff, guys, because people are getting shiny object syndrome, okay? There's particularly one member in the community that talks quite a bit about Luna. Much love to whoever this individual is. We all love you. I'm just trying to protect you. Turn this chart off, okay? If you're somebody who's staring at the Luna and Sol chart all day because of whatever new all-time high it made, please take this as words of wisdom from Chief Wolf. Turn the chart off. There's other opportunities elsewhere, okay? This is a good way to end the Red Pill podcast because a lot of people need to hear that kind of stuff. Okay, too many people get caught up. It's like Dogecoin. Remember when people only wanted to talk about Doge and then it took a huge shit? And at the same time I was talking about Doge, I was warning against it. And it's had a full retrace since. So is it a buying opportunity now? Yes, way more than it used to be. But people aren't talking about it right now. So isn't that what I always say to you guys? You want to talk about something when no one gives a shit. Okay? That's the best time. The best time to buy is when no one cares about it. No one cares about you, Doji, because you've lost 85% of your value, and everyone thought you would go to $1, but you never did. Okay? Words from Chief Wolf. Don't look at charts when everyone is excited about them. Look at charts when no one wants to talk about them. So here we are. We have this chart and it's clear as day. It's done a full retracement. It's came back to backtest prior peak highs, and now it is ready to decide where it wants to go next. Does it want to continue taking a diarrhea, or does it want to have somewhat of an SOS? And SOS would be above 35 cents. But I wasn't supposed to cover this coin. I'm just letting you know. Get focused on things that have opportunity. That's what my channel's all about. I'm trying to get you guys focused on opportunity. And that is where the money's to be made. Unless you're a very sophisticated swing trader, then of course you could have made a lot of money on Luna on a 4x leverage trade when it broke out. Congratulations. But we're trying to build portfolios over the long term. And when we're talking about trading and trading thesis, that's totally different than, when we're talking about investment thesis. It just has a different strategy. Overall, you can use similar principles, but it does require a much more sophisticated strategy that requires a lot more protection of wealth, stop losses, understanding of liquidation, the amount of loss that's at play if you're playing with leverage, etc. So just be careful out there and focus on the prize, okay? Focus on the prize, not stuff that people think is doing well. Because at the end of the day, there's a lot more money to be made in a lot of other places. So with that being said, I think this is a good time to wrap up the Red Pill podcast. We went over a lot of things today. Again, if you had that glitch that happened to you on the Discord, you just re-listen to what I said in the beginning of this, and you'll be able to regain Discord access pretty easily. And I'm wishing you all a beautiful rest of your weekend in the Matrix. Hope you enjoyed this episode, and welcome to a new year for us over here in the Mastermind community. Sending love and gratitude to everyone who's been with us since the start. You guys are legends, and I love every single one of you. Much love.